Overall, I think cash flow underwriting has demonstrated in production an enormous opportunity, to use the cliche term, expand access and inclusion for people who may not be underwritable based on the data that is on the credit bureaus.
Welcome to the Galileo Financial Technologies Podcast. I'm your host, Scott Henderson. We're here to delve into the thrilling world of fintech and banking, exploring the latest trends, innovations, and disruptions. Every episode features insightful chats with industry leaders and visionaries who are pushing the boundaries of finance and banking. Whether you're passionate about fintech, running a startup, leading a large bank, or just intrigued by financial technology, this podcast is your go-to source for staying ahead. Let's dive into the future of finance and banking together. All right, welcome to the Galileo podcast booth here at Fintech Nerdcon 2025 here in Miami. I'm Scott Henderson, and today I'm talking with someone who's shaped how the industry really thinks about consumer data and fintech. Doesn't really need too much of an introduction, but Jason, if you wouldn't mind just introducing yourself and letting us know a little bit about what you're working on and what you do today.
Yeah, absolutely. I am Jason Mikula. I'm the publisher of Fintech Business Weekly, which is a newsletter covering latest developments in banking, fintech, occasionally crypto if I have to, really touching on public policy and regulation, how that shapes banking, fintech, how those entities work together, and the kinds of products and services they can design and deliver. This is my last day of my last conference for the year, so I've been collecting a lot of thoughts from out in Bozeman, Montana, from Washington, D.C., finishing it off here in Miami for Nerdcon. And really, you say consumer data, like 1033, very much still top of mind. Out in Montana, we had a session on consumer privacy more broadly, so the idea of who owns or controls the data. Is it the consumer? Is it the companies they work for? What can they do with it? And really excited to have this conversation today.
Likewise, yeah, sounds like you've been busy over the past few months with it being conference season. But I want to kind of understand, when you were entering the industry, or maybe many years ago when you were younger, did you ever see yourself attending court cases for fintechs that have gone bankrupt and really trying to stand up for the consumer and help people get money back? Did you ever see you being in this position?
Absolutely not. I imagine some people are familiar with my background, but I worked in industry in operational roles for more than 10 years at consumer lenders. So I started my career in marketing and product management roles at Enova, which is a small dollar and SMB lender. I was part of the team that built and scaled LendUp, which no longer exists. Went to Goldman, where I helped launch Marcus, consumer lending franchise. And then I've done other sort of advising consulting roles with other lenders. I really transitioned into the role I'm in now when I moved abroad. I was like, oh, people in the Netherlands, where I live, don't really use consumer credit the way that Americans do. And so I had this career pivot or career transition from the kinds of operational roles I had been in into sort of figuring out whatever it is I do now. And even I'll actually push back a little bit on the way that you frame that, because I don't necessarily consider myself an advocate for consumers. Like, I don't think of that as like the role that I inhabit. I do care about that a lot, and I think that's probably very obvious in my work given how you framed it. But like in this case, the Synapse case, I think about my role as like bringing awareness to what is happening and where that is falling short of sort of the expectations, whether that is expectations from regulators, from customers, from fintech programs, and like really examining like what went wrong, and actually that'll be my last session later today, what went wrong and how do we prevent that from happening again? And what are the impacts on fintech and banking as an industry, as an ecosystem?
And the industry really respects your voice and your perspective, and that was one of my questions, was your role in the middle, I guess you could say, between these different intermediary parties. But how do you view yourself in terms of providing value to the industry or a perspective? Like you tend to really dig deep and understand what's happening in the regulation, but how do you view yourself in the industry?
No, that's a great question. I actually had a very similar question up in DC, because I think people often tend to think of me as a reporter or as a journalist, which I understand why. That's not generally how I conceptualize my own role or how I self-identify, in the sense that I do have a point of view on the topics that I'm writing about, right? So it's not just a factual summary of, oh, look at this product that Fintech X put out. Like, it has, whatever, tips and expedited funding fees. Like, I do have a point of view on what is a good product or what is a bad product. And in the course of like the work that I'm doing to analyze how are consumers using products, how are businesses using products, why are they choosing one over the other, what are the features, what are the benefits, what are the jobs to be done, what are the problems solved, I will bring that point of view, which is, I think, quite distinct from what people think of as just the facts, ma'am, straight journalism. Yeah.
I love that. Focusing a little bit more into that specific of consumers and companies that build products and this data economy we live in. So you've talked about that a bunch, but maybe just help us understand like what kind of economy when it comes to data are we living in 2025? And what are some of the, especially in the US, some of the drawbacks or pitfalls, I guess you could say, that we see here in the US?
Yeah, I think if you survey consumers and ask them, do you care about privacy? Do you care about who has your data and what they're doing with your data? In a survey setting, people will say yes. Yeah, of course I care about my privacy. Of course I care about what the bank has on me or the fintech company has on me or whatever. That is a stated preference. The revealed preference, meaning how are people actually behaving and what does that tell you about what they really care about as opposed to what they say they care about. Most consumers, myself included, don't actually behave in a way that is aligned with caring about their privacy. A couple of very quick examples that I think everyone can relate to, like how many times have you opened a website, had a cookie banner pop up? Has anyone ever actually read that cookie banner? Like, absolutely not. I don't think anyone in the history of humanity, except lawyers, has ever read a cookie banner. Or, updating to the latest version of iOS. Here's a 700-page legal agreement that I need to scroll to the bottom of and click agree without reading. And so it's like, I think there's a tension there between what people say they want and what their behavior actually indicates their preferences are. That said, there are potential risks and downsides to companies that do not behave responsibly in how they protect the data that they hold. I remember this was a couple months back, there was some, I don't know if it was quite a dating app called T that was like, I think it was more like a Whisper Networks review, whatever, problematic men, if I'm understanding correctly, and like massive data breach because they had some like unsecured data store bucket on AWS or something like that with the onboarding information from the women who were using that platform, including photo, contact information, geolocation. And so that's an example where you now have people who are potentially at like very serious risk because a company took a very, I would say in that case, like incompetent approach to how they protected the data that they held. And the recourse, honestly, it's okay. The most common recourse is class action lawsuit. I was actually, since I don't live in the US, I don't use Venmo very frequently. And I was paying somebody out in Montana and like scrolling through my Venmo, the last 6 transactions were class action settlements. More than one of them was related to privacy violations. I think it was like an Instagram one, there might have been like a Plaid one in there. The only people who really benefit from that legal process are the lawyers. I think the settlements tend to be like $6, $10, $20. And for businesses, it's often just a cost of doing business. Oops, we messed up. Okay, we're gonna go settle this data breach. For consumers, they get $5 or $10, but harm that comes from that is hard to attribute to any single given data breach because all of us have had our data compromised so many times.
Yeah, so talking about data standardization, you've done a lot of analysis about the CFPB's 1033 rule and really talked about some of the technical implementation issues that it has presented. So what are the most critical data standardization issues that could make or break open banking adoption?
That feels like such a loaded question given with where we are on like 1033 and open banking at the moment. The reality is like the CFPB is basically like on track to be shut down, or at least functionally shut down because it will have no money late this year, early next year. Even if there is a new version of the 1033 rule, right? So that's going through the APA rulemaking process, which if you don't know what that is, you don't want to. Even if it gets across a finish line where there is a new rule that is formulated, it's immediately going to be challenged in court by whoever feels like it's not doing what they want it to do. And so I think that standards is almost like a secondary question to, is there a finalized rule that exists and is agreed upon? And I think the most in any sort of near scale time horizon, the answer to that is going to be no, because there are so many grounds on which whatever rule, if one is made, so many grounds on which it's going to be challenged.
So as data becomes more open, what new potential products or new services or new experiences do you think banks and fintechs maybe aren't even thinking about right now, but as we move towards more of data being able to be accessed, like what does that open up for banks and fintechs?
I think the most obvious use case that is already fairly widespread is using bank account transaction data for underwriting, right? So like understanding not just the traditional credit bureau data that's like whatever, FICRA compliant, but like actually being able to understand what is a person's cash in, cash out, how are they managing that account? Again, that also comes with risks and challenges. The examples I was actually chatting about with people at this event and at some of the prior ones was, okay, let's say just on an aggregate basis, the money in, money out looks fairly good from an underwriting standpoint. What if you see transactions like, ooh, this person funded a DraftKings wallet, or this person is doing a lot of polymarket activity? And if you actually do the analysis and understand if that is a risk splitter and saying, hey, even though this person looks fine from a cash flow perspective, because of where they're transacting, he or she is higher risk, and I'm going to give them a different rate or decline them. So again, this is an example where it's like, overall, I think cash flow underwriting has demonstrated in production an enormous opportunity, to use the cliche term, expand access and inclusion for people who may not be underwritable based on the data that is on the credit bureaus. But this also comes with new risks, and I would argue like new ethical questions, right? When the person is clicking the button saying, I'm agreeing to share my data via whatever, Plaid, MX, Finicity, for the purposes of applying for a loan, even if they read whatever the T's and C's are, they probably do not understand like how that data is going to be used and what's going to happen to it after they apply for that product. And from a lender, what they're building, regulatory compliance standpoint, there are still open questions about how that kind of granular data can and should be used and what the obligations are.
Moving on, you've talked a lot about permission data versus screen scraping. How do you see the liability and risk frameworks evolving as institutions potentially transition away from credential-based access?
So I think this is a particularly acute question given the rise of some of these vibe coding tools, AI agent kind of tools. It really is making it much easier for companies to develop their own screen scrapers, whether that is specifically for bank account data or for other kinds of data. Actually, one of the companies I'm an investor in has a product that basically does this for like an e-commerce receipt. So imagine you bought something at Walmart and some company wants to understand what is on that receipt of what you bought at Walmart, like at an item level, what's the SKU, how much did you pay? Again, you can imagine a lot of interesting use cases and what you could build with it would be positive. You could also imagine instances where actors are using that data in a way that is maybe like slightly less ethical or slightly less savory. So I do struggle with this because in the US, the approach tends to be this sort of informed consent, like disclosure regime, where as long as I am ostensibly telling the person, the consumer, what I'm collecting and what I'm going to do with it, I'm fine. And again, as I referenced earlier, like most people don't read those, I don't read those. And so I do think like there is a middle ground where there's a level of appropriateness of regulating what data can be collected and how it can be used. And that was essentially one piece of what 1033, like the open banking rule, was attempting to do. Now, what happens in a world where like that never gets finalized and it's all market driven? Like that may be good for business. It's probably not good for consumers.
So when it comes to consent mechanisms, ongoing permission management, so what models are emerging to help users balance their control with the practical usability of a tool?
That is also like a great question and an area where I think parties are continuing to negotiate and attempt to find balance, right? So in the open banking example, what is the right cadence at which that should be recertified, right? And where's the right balance to protect that consumer who applied for that loan 6 months ago and may not realize, that company is still accessing my data on a monthly, on a weekly, maybe on a daily basis. And at what point should, most likely in this case, it'd be like the open banking aggregator layer or that user's actual FI, their institution, say, hey, did you know, like, you're still sharing data with sketchy subprime lender X? Do you want to revoke that? Or flip it, like automatically have it expire unless it's explicitly reauthorized. So like there are different ways you could approach that question. But again, absent like explicit regulation, which seems increasingly unlikely, it's like up to the market to determine, and consumers really don't get much of a voice in that process. It's like a negotiation between the parties that are creating the data, transporting the data, and ingesting or using the data. The consumer doesn't really have much of a seat at that table.
Right. Talking about consumers, I want to just talk one more thing about open banking, and then I want to shift gears to a different topic. But what should banks and fintechs really do in practical terms now and in 2026 when it comes to open banking and the new rule to really be able to innovate and move forward?
I would say like the number one thing is understanding that there is an insane amount of uncertainty right now, including perhaps most importantly around the economics, right? This will take time to flow through, just given like the nature of the underlying contractual agreements that are in place. But like we've already seen, specifically with JP Morgan Chase and Plaid, and some coverage I did not have time to fully read, but it sounds other aggregators were coming to similar agreements with JPMC, is even if the open banking aggregator layer is saying, we're just going to eat this in our margin and not pass that cost along to the fintech side, like to the data consumers, like I'm a little skeptical that will remain the case whenever those contracts come up for renegotiation. So if you are a fintech and you rely on open banking data, I would be doing scenario planning to understand, okay, what happens if my cost per API call goes up 10%, if it goes up 30%, if it goes up 50%? Does the use case still work if I'm paying double versus what I'm paying now? Like that's the number one thing I would be looking at.
Got it. No, that's great insight. Shifting gears a little bit, I want to talk about BaaS.
Okay, I can do that.
You've been involved in everything that's unfolded over the past few years in the banking world. And I remember, I'm not sure when it was, if it was last year on X, seeing an image of a bunch of Spider-Mans pointing at each other, saying who's responsible for what. So what have you learned over the past few years in terms of the banking as a service industry and where we are?
I think even that nomenclature, like banking as a service, BaaS, it feels like somewhat of a four-letter word lately. Like people are migrating using other language. Obviously, like bank-fintech partnership has been evergreen. I've noticed a pivot to people describing things as embedded finance and like moving away from the sort of BaaS terminology. And I think my sort of biggest takeaway, and we do not need to go down the Synapse rabbit hole, but just like broadly of that as a model is the increased risk, operational risk, and the unknown unknowns. And even now, in late 2025, I have a couple more investigation type pieces cooking that I can't scoop myself on. Well, even now, you're seeing this kind of not third party, but fourth party, fifth party, sixth party risk where you have a bank, you have maybe issuer processor, you have a program manager, and then maybe one or two layers below that. And just the sheer operational complexity might be too hard, like impossibility of, if you're the bank monitoring who is this sixth party that is onboarding and doing, I don't know, corporate card issuing or something. And like that hasn't been solved for. That risk is still out there, and I'm like actively seeing examples of like problems because of it.
So how do you see some of the established infrastructure providers that have a lot of experience with compliance and obviously robust capabilities? How do you see them positioning themselves as the industry matures beyond the move fast and break things mentality? I think in the past what we saw was having a BaaS provider that kind of gave you everything in a one-stop shop, helped you get to market faster. But I think obviously we've seen things evolve where as a program manager and responsible for all the aspects that go into launching a successful program and managing that program successfully, it's evolved more towards that approach. But as you said, you start to add more vendors to the stack and it becomes a little bit more complicated. And so how do you manage between the complexity of all of this, but also get to market on time and be able to launch a successful program?
I think what you're describing historically is exactly correct. Like the sort of middleware platforms or BaaS platforms were viewed as a quick way to get to market without having to build the full staff, like both the full staff, the full team, as well as build the full infrastructure stack. I think in some senses that remains true-ish, but I think the expectations on the bank partner side, for the most part, have changed, where even if you're using that middleware like infrastructure layer for technology, I think the expectation of what is the level of understanding and competence, again, particularly from a compliance standpoint, like at the operational fintech level, like that I think has changed. And like despite certainly the change in administration and change in messaging we're getting from like senior level leadership at the different regulators, in my experience, like especially smaller banks are not necessarily thinking on a 2-year or 4-year time horizon when it comes to this stuff. Even if there is a perception or a reality that, regulators are going to refocus specifically and only on financial risk as opposed to some of these other categories like operational risk, info security risk. I think the people who are building sustainable businesses like are not going to stop doing those things.
Right. So when it comes to building these different products and experiences, what do you feel like right now is maybe overhyped or not hyped enough?
This might be, I might get kicked out for saying stablecoins and AI, but like particularly the AI hype cycle feels orders of magnitude like bigger and crazier than like some of the ones we've seen in the last 2 or 3 years. I don't know if anyone remembers the metaverse or Web3, which were also supposed to fix and change everything. Like, spoiler, that did not happen. To deploy an oft-used cliche, like these things tend to have less impact and change in the 1 or 2 year time horizon and more in the 10-year time horizon. I suspect that will probably be true for AI and also stablecoins. And I think, and I was on stage discussing this yesterday, stablecoins specifically, I think it's also important to segment and say for whom and in what market. So like in the stablecoin example, like I think for domestic US consumers, unless you're actively trading in crypto or perhaps, sending remittances abroad, I think your average American consumer is not going to hear, understand, or care what a stablecoin is unless something blows up and then it impacts them personally. Conversely, if you are trying to send money to friends and family in Mexico or Venezuela, or you are trying to run your business in Argentina and get paid from a vendor in the United States, I think there are areas where you are already seeing more rapid adoption because it does solve a real problem. Also, is it solving a real problem because the technology is different, or is it solving a real problem because it's a regulatory arbitrage? But we don't have to go down that rabbit hole.
Right,
that's a different podcast.
That rabbit hole. But we listened to a conversation earlier this morning from Coinbase and one of the things they're doing in terms of stablecoin, and they made it clear that they don't want the end user to really experience like what a stablecoin is. They just want them to be able to have a flawless user experience, whatever happens behind the scenes. Yeah. There's obviously a lot of conversations this past year and at the conference around stablecoins, but if you were to invest in or build a product yourself heading into 2026, like where would you put your bet? Where would you put your money?
Oh, that is an interesting question. Broadly, like I am very interested in the opportunity to use technology to automate things that are time-consuming, manual, and repetitive. So like a lot of what we've seen, I guess I have an information availability bias, but like I feel like a lot of the excitement around AI stuff, let's just call that broadly because there's a lot of different categories, in banking and fintech has been around potential applications in the compliance space. So like how do you take things that, when I was at Goldman running the marketing function for Marcus, like I remember having to sit with legal and compliance and literally review like 10,000 variations of ad copy that would go on Google Ads. And I can tell you, none of us wanted to be in that room. I did not want to be in that room. The lawyer did not want to be in the room. The compliance person did not be in the room. But like, there, at the time anyway, like we did not have a better process or a better tool in place. So these kinds of things where it's like, how can we expedite and make more efficient doing something like that in a way that still achieves a level of confidence in the outcome that is at least at parity with human review. Like, humans are also not infallible, right? So I don't think the expectation should be 100% perfect all the time, no errors. Like, the benchmark should be, is this doing as good of a job as like a human or a human team would do?
I love that. So you've clearly shared a lot of information with us, and it's been super valuable to hear talking about consumer privacy rights, data, banking as a service, and where things are headed. If you had to give banks and fintechs like one piece of advice heading into next year, just in terms of these things that we've discussed, what could you leave with us?
I'll echo the sentiment I expressed before, which was like, there is a very strong sort of like gold rush mentality right now, particularly look at like applications for OCC trust charters, some of the stuff happening at the state level, excitement about the prospect of getting access to a Fed master account, or FedGov Waller floated this idea of a skinny master account. There is a real sense of excitement, enthusiasm, and this like sort of gold rush mentality. I would also say building for the long term, and who's in power changes, regulations change, there are still state AGs, there are still state regulators, so it's not, there's a sense that it feels like a free-for-all, but there are still enforcers, both now and there will be in the present, in the future. So things change, and understanding like, how do I build a sustainable product and a sustainable business that can navigate and survive through what is increasingly a regulatory environment where the pendulum swings very sharply, like admin to admin.
Super valuable insights. We really appreciate you taking the time to sit down and talk with us. Where can people learn more about you if they want to dig deeper into what you talk about?
Yeah, absolutely. They can find me at fintechbusinessweekly.com, which is my newsletter, or you can find me on LinkedIn, Jason Mikula.
Awesome. Jason, thank you so much for taking the time to meet with us. This has been awesome.
Yeah, thank you.
This podcast has been a production of Galileo Financial Technologies with all rights reserved. The content is provided for informational purposes only and is not legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information. You understand that any reliance on this information is at your own risk.